Welcome to another episode of Beating Alpha. This is episode 69, and we have a very special guest today on, as you will see here on the screen in a few seconds. First of all, I want to introduce you to Chris Grenzig. He started a real estate investing journey in January of 2016 by trying to flip houses on Long Island, New York, but failed to flip a single house despite spending tens of thousands of dollars and several months trying. So again, we probably should talk about that, what to do and what not to do. This is what the show is for. So Chris and his team tried pivoting to purchasing tax deed properties in Philadelphia, but quickly realized it wasn't for them. From there, Chris started to learn about multifamily and started by investing passively in an 8-unit property, then joint venturing in another 100-unit worth over $4.5 million. From there, Chris quit his full-time job in finance and joined Toro Real Estate Partners full-time in August 2016. So Toro has acquired roughly 4,000 units worth around $285 million, and Chris runs their Florida operations totaling 1,000 units worth over $60 million. So as you see here from the bio, is going to be a very cool, impressive, wealth of knowledge interview. So again, Chris, appreciate it for the time today.
Yeah, thanks for having me on, bud.
So where did we start? 2016, what happened there with the flipping houses? Can you give some advice for the people? And maybe if we kind of go back to the times of young Chris, he's still young, but when did you decide to follow the path of real estate investing?
Yeah, so that was so I graduated from college May 2014, and I tried coaching for a year up in Massachusetts. So Long Island, born and raised, went to college on Long Island. That was my first year away and really missed home. So decided to come back, got another job coaching, and then also got a job as a cold caller for a stock brokerage company. And then eventually got licensed, but I really hated that job for a few reasons, but started looking for like the transition for the next thing out. And just got very lucky that in January, my mom and my cousin had decided to buy a flipping course. And my mom was obviously someone I spoke to about wanting to leave. And she said, why don't you come to this weekend seminar, see if it's something that would interest you? You can do it with us. We'd be happy to have you. So I said, sure. And that was first introduction into real estate. I knew nothing before that. My length of experience was growing up in a house, and I rented a house once. That was it. So it was a huge learning curve for me. I learned that weekend that asbestos is not a type of mold. That was one of the first things I learned. So that was fun. And after that, I was hooked. I mean, they do a good job of not selling the vision, but selling the vision of, making six figures, flipping tons of houses a year. And that was I was like, this is great. This is what I want to do. So spent nights and weekends after my two jobs trying to make this happen for the next several months. And like you mentioned, ultimately failed. We never bought a home, never even messed one up. I've got one failed flip to my name in Charleston that happened about 18 months ago. So it wasn't even during that time period. One day, hopefully I'll have a flip that's successful, but currently none. So yeah, we tried. Eventually we pivoted because we heard more about people doing it out of state and decided to try to partner with flippers. Found out no flippers really want partners, but everybody wanted a hard money loan. So we ended up lending to somebody to try to learn.
Got it. Okay. So that was kind of first lessons in real estate business. So besides that, I mean, your mom, like why did she decide to follow through like on a flipping houses course?
Yeah. So my mom had worked as a school administrator for 15 years, and I forget if she was retiring or just retired. I mix up the timeline, but she's not the person to just remain idle. And she had done it, a few years early. She did well and saved up and was looking just for something else to do. And she had always wanted to start moving money from more traditional investments, stocks, bonds, funds, etc., into more alternative stuff like real estate. And like most people, when you think about real estate, if you grow up, you own a home, they had owned a rental property in the past, you think single family homes, they never thought of the commercial aspect of it. So naturally, she just looked at what other people do, and HGTV is a big program. She heard an ad for house flipping. House flipping is way more popularized versus other types of real estate investing. So that was kind of the first thing she went with. My cousin was also looking to do some other things. He was working a full-time job in Manhattan. He had just gotten the authority to start working from home more. He just got his agent's license, and he basically just said, this is another part of being an agent. I can just, houses I don't sell, we can buy and flip or something along those lines. So that was kind of why they decided to go down that route. And for me, it was just, I was still younger. I was 2016. I just turned 24, excuse me. And, still young, still trying to find my way. And I said, what's one weekend seminar, right? It's one night out, not with my friends. I think I can manage.
Yeah, definitely. Well, it turned out to be pretty well for you, so.
Yeah, no, it luckily, indirectly, one of the best decisions I ever made.
Yeah, well, definitely guarantee you that, probably some of the friends they used to go out, probably they didn't make similar decisions and they didn't put themselves in a positions as you're putting right now, as we talked before the conversation. Again, all due respect to your friends, but that's what making good decisions, even sometimes, making a decision into let's go in a course of flipping deals, and then turns out to be a bad deal or for whatever reason. Again, it's a lesson learned, but at the end of the day, you come out, to the other side when you're growing and you're becoming more. So how did you turn out to be involved into the 8-unit multifamily deal? I mean, where did that come from?
Yeah, so that flipper that was doing the flip in PA that we lent money to, he introduced us to his cousin, who's John Cohen, who's one of the owners at Toro, where I work now. And we just met with John because we thought it would be a good networking thing. And we started talking, and his introduction was actually buying tax deed properties at auction down in Philadelphia and fixing them up and either holding them to rent or flipping them. And to us, that sounded really interesting because we were finding the problem to be in our area of finding deals cheap enough that it made sense. So this was, you could buy properties for a few $1,000s. Philadelphia is not that far. And we said, okay, we'll give that a shot. So we just asked him for some help to get started. He kind of showed us the basics and the ropes and was going to, help us get on our feet. Me and my cousin decided to drive down one weekend. So the process was, the auction was on Sunday, and John's process was drive as many properties as you can on Saturday to try to get more information, because you would literally get like the address, the parcel information, and the starting bid. Oftentimes you wouldn't even know how many bedrooms, how many bathrooms. So you would try to go get information beforehand so you could have a better idea if it was something you wanted to bid on or not. Drove down Saturday morning, stayed all day, decided to drive back because we had no encouragement to actually buy a property. We just flat out hated it. It was in super rough areas. The drive was long, and my mom had no desire to drive down. My cousin, his agent business was starting to pick up at this time. He was also, I forget, he'd either just had his first kid or was having his first kid. And I just saw the writing on the wall of, I'm going to be the one driving down every weekend having to do this. And at the time, being 24, the occasional weekend missing stuff I was okay with. But if I was going to start missing every weekend, I was not in the place where I was willing to just totally sacrifice my entire social life. So I said, this isn't just going to be a good fit for us right now. Even though I still think it was a very good business model and there was a lot of opportunity, it just wasn't what we were looking to do. So came back, met John again, just said, thank you, but it's just not right for us. And at the end of the meeting, he had just secured that 8-unit property under contract and was raising money. He just said, hey, I know you guys are trying to do your own thing, but if you have any interest, let me know. And we said, yeah, sure, we will, blah, blah, blah. And as we kind of went away, we started thinking about it. We had started learning about multifamily. We were interested in it, and we just felt it was a little bit of a better fit of what we were looking to do. And we thought about it the same way as the flipping side. We said, let's invest passively to learn more and see if we can get our foot in the door that way. So we went back to John and said, hey, we'll invest. Our only caveat is, can we jump on a phone with you, grab coffee, pick your brain once a week, every other week, I forget what it was, and just learn more about it? And he said, sure. So from there, we just started getting coffee, talking to him. He had a meetup that he had just started, the first one we went to, and we just started trying to find ways to ingrain ourselves with him to leverage his experience and knowledge, because it was something we started liking a lot quicker than the other ones. And we were like, okay, I think this is the one that we want to really move forward with. So we started helping him with the meetup. And then we went to him and said, hey, we're not ready to do this by ourselves yet. Can we partner with you in deals? And he said, sure. So we said, we'll help you with the raise. We'll help you with a lot of the grunt work. And we went out and we partnered on another 17 units in that same area. It was 3 properties, 17 units, closed that. And then a few months later, actually bought a 82 unit down in Jacksonville, Florida. And right around the time I was doing that 17 unit, I was still working as a stockbroker, hated it, ready to quit. And as luck would have it, John was still early on in his company, Toro, with his partner, Don. John was still doing some smaller stuff on the side. Toro was focused on 100 to 500 unit properties, 10 to $50 million properties. And they were under contract on their 3rd deal. I just happened to be talking to him one day. I was like, I really hate this, blah, blah, blah. And as luck would have it, or coincidence, he had actually worked for the same people at a different company about 5-6 years prior. So he understood what I was going through and told him I was looking to leave. I wanted to do real estate, but wasn't quite there yet on our own. And he said, why don't you just come over for a few months, try it out. We'll try you out, see if it's a good fit. And you can work on some of the bigger stuff, help us out. And I think I said, sure, pretty quickly. And that was August of 2016, quit my job, went over to Toro full time, and then eventually, evolved into a role where I run the Florida region of our portfolio.
Beautiful, beautiful. That's a very good story, So
Yeah.
thanks for sharing that. So again, having an experience a little bit working as a cold caller for the stockbrokers and having a taste of, stock market, well, at least a little bit, to some degree. Do you still believe in diversification, and do you planning, or are you investing into different assets out there in the marketplace?
Yeah, I'm big on diversification. I think when you start diversification, I think it is less important. I think as you start accumulating wealth, it's much more important. I think there's a saying, I'm probably going to butcher it, but you get rich by doing one thing really great. You stay rich by diversifying into many things. So that was always something. I'm a little bit less risky, so I've diversified earlier, but I'm a long-term person. Being a stockbroker, it was all the quicker, the better. So try to get in and out of something very quick, for good or for bad. And one of the reasons I wanted to leave is they were very commission focused. They were very much self-focused, and they didn't really care whether the client made money or not. And I thought that was a very bad way to do business. And I think long-term, it was never going to play out. So that's one of the reasons I left. But the investing side, yeah, I'm big in diversification, whether it's location, asset class, time frame, the sector that it's in. I'm going to continue to look for more and more things. I mean, I've explored things as crazy as like buying a laundromat in Brooklyn, doing a drop shipping company on Shopify. Never did it, but looked at those things because I think diversification is huge.
Oh, definitely agree with you on that one. So what will be your type of advice, again, for the people who are watching this right now, still during the COVID times, or maybe it's post-COVID, you're watching this or listening on a podcast, but maybe you're, again, young as Chris, maybe you're in 20s, or maybe you're 15, or whatever the age might be, 30, right? So, but you kind of lost and you're thinking what I could do in my life. And in those positions when you're lost and you just don't know where to start. Mm-hmm. What will be your advice? Because you've been going through, a lot of those kind of finding your own path, experiences yourself. What would you recommend for those people?
Yes. I think anybody sitting at home, if you literally are doing nothing, like let's say the base, nothing, have no idea where to go, you probably have an inkling of something you like. And there's probably a way that thing you like can lead to a job or a way to make money. You have to try it to figure out if it's the right thing. And what I think a lot of people do that I didn't do as much, or I don't do as much as other people, is they spend so much time debating which one is the right route to go. Is it this one or it's that one? And all that time extra that you spend is extra time it takes you to realize if it's the right thing or not. You already probably have a gut reaction. Just start finding out more about it. The perfect example is the tax deed stuff in Philly. We kind of thought it was a good idea. We weren't really sure. I don't think we were in love with it from the beginning, but we knew we wouldn't know until we actually went down and tried it. But we realized very quickly that it wasn't right. If we had waited another 6 months, that would have been another 6 months that we wouldn't have figured out if it was right for us or learned about multifamily. We may have entirely missed the opportunity to work with John. I may have missed the entire opportunity to go work for Toro. I could be living a very different life. Now, I'll never know. Who knows? I could have been in a much better position, right? Or I could have been in a much worse position. Yeah. That's the other great thing is once you make a decision, you'll never know the alternative. You'll never know what would have happened otherwise. It could have been infinity better and it could have been way worse. You'll never know. So for me, it's start figuring out what's a couple options that you might be interested in doing, and then just decide to try it and do it. And if you go down it and you like it, great. If you don't, then pivot and do something else.
Great advice. Again, thank you for sharing that. Again, I'm sure you're a big proponent, of educating and, teaching yourself things. Because again, if you want to go and diversify in different platforms, different asset classes, person at least should know a little bit or maybe a lot about the asset class. Let's say if it's real estate or drop shipping, stock market. So, and there's multiple ways that people can educate themselves, multiple sources out there. But what will be like your top sources where you get your education pieces, and what would you recommend for people to go and follow and, educate themselves?
I think if you're starting from zero, the best place is Google. There's so many people out there creating educational content or content in general around a subject. It'll take maybe some time to really find the good educational sources. But once you start Googling and finding people, you can start getting an idea for things. And if you start with those things and you start liking it, then you can start reaching out or following people that are working in that industry and find more. And you just slowly but surely find better and better resources. The best way, just how curious are you naturally? There's an easy way to find out anything. So really just start Google, just start looking. YouTube too, if you're more of a video person. I'll usually do both. But that's really the best way in my opinion.
Exactly. Oh, there is multiple ways. Again, networking, as we just connected on, I'm sure it was Instagram or Facebook. I can't remember now, but yeah, if you just go and basically connect with the people that would like to, I wouldn't say, like pick their brain or just to have them on the show, again, look for ways to add value to those people at the same time, because it has to be, create those win-win situations. But, there's multiple things like YouTube, podcasts, blog posting. I mean, there's unlimited amount of information. So maybe sometimes people just get lost in all this ocean of, wealth of knowledge. Is just like, they don't know where to start. But I like what you said, if you just Google.
Yeah, I think two interesting things, because I talked about like the laundromat and the drop shipping things. The drop shipping, I did a lot of research on, and actually like just opened up like a free store on Shopify just to like see how it works, and started doing it. And I never connected with anyone to ask about it, because I started going down that rabbit hole. And for me, the reason I stopped was I didn't see how I could have a competitive advantage over other people. And I felt like so many people today are actually building real brands where they have real product and that they're invested in. I thought, I don't see how I'm going to last. I'm not saying it's not a good business model. I just felt for me, I was going to be spending too much time on something that was too easy for other people to enter. When you have a low cost of barrier business model, it just eventually becomes a margin game. Who's willing to take the lowest price for the same product? And for me, that didn't seem like a sustainable long-term play. I understand people do well and you can shift to different things and play trends. For me, I was just like, it's going to take too much hours. It didn't feel right. The laundromat thing, though, made a little bit more sense to me because it was a little bit more relatable to what I was doing. So I actually went down that same rabbit hole. I was like, maybe not. And then I started talking to a couple people. And once I started talking to a couple, it was people I knew that knew of people. And when I heard their secondhand accounts, it was something, again, I decided to take a step back from, because I felt there was too much knowledge, that like laundromat specific knowledge that I would have had to get quickly, that I felt I would have been too at risk. The way I would have entered would be to try to find a partner who knew a little bit more, or to piggyback off of it. But when I started looking at it, I was like, I heard of too many people that had failed doing it, especially in the city area. It was a lot of unknowns. It was a lot of like less proven ways to figure out how much it actually makes and what your actual expenses are. So I did go a little bit further down that route of, hey, starting to network and talk with people. And then again, just made that decision to just cut it and maybe revisit in the future.
Exactly. I love what you just covered. And if I would just simplify for the people, I think that will be the whole idea, because there is business opportunities around still that you should did 5 years before. There's the market is just saturated for some business opportunities, as you mentioned, Shopify or whatever that might be, unless you have unlimited capital and you want to drop that in a business that you don't know anything about, you want to test the waters. But again, there's not a lot of people who are in that position to have, access of capital that they can go and compete with these established brands, as you said.
Yeah.
But if you just choose the thing, if you already have the thing that is correlated to what you're doing, the main thing that you're focusing on, which is, laundromat, like it's correlated to the main business, which is multifamily that you're doing. It's not that far. So, and it's going to be much easier for you to pull the trigger on that. So definitely that's a great advice on that one. So
Yeah.
looking
And
at, please.
sorry, just real quick. Big part was I want to be clear that there's nothing wrong with either of those two business models. They just weren't right for me at that time, which is why I decided to stop.
Exactly. It could be right for some people. Yeah. So
100%.
go ahead and compete, because you might be, the one who's going to come out, at the top, even though you're just starting out. I'm not saying, everything is possible. So look, Toro Real Estate Partners, 4,000 units so far. So what is the strategy with you guys? What are you currently doing in the market conditions? Are you a seller? You're a buyer? Like, what is your approach in the market conditions now?
Like as of today during COVID or in general?
In general, the 2020.
Yeah, I mean, with COVID, we took a big step back. We were fortunate that we did a lot of business the end of last year and the beginning of this year. So we're not like, we need to generate revenue, we need to buy these deals. We also co-invest in all of our deals. So it's a lot of our own money making money. So I think we're probably different than some others in that regard. We are definitely more cautious at the moment than I think average. We're not really looking at a ton of deals from the company level to buy right now just because of the uncertainty and what's going on. However, we're not necessarily a seller right now either, but that's more of a product of most of our deals are still implementing their capital plans and their renovation plans. So I think if let's say every deal was finished with this capital plan, we would be evaluating whether it's a right time to sell or not. I don't think there's anything holding us back. I think more and more deals are starting to transact in the last month than the first 4 or 5 months of COVID. So it is kind of opening things back up, but we're still fearful that, at the blink of an eye, the country can shut down again and we'll be back in some of these unknown areas. So for us, we would just rather miss out on an opportunity than potentially shoot ourselves in the foot and over leverage. So we're not really in a big rush right now to do anything. We're still looking. We would still 100% buy if the right deal came along, but I think we just kind of tightened up some of the ways we were looking at things.
Yeah, that makes total sense. So what about the deals? So again, for the people who are watching, multifamily properties, so maybe you can talk about that. Like what states are you currently investing in? What asset classes are you buying, or what do you currently own in the portfolio?
Yeah, so we own in some other areas, but we're currently only focused on 2 clusters, North and Central Florida and a few cities in the Midwest. So we target MSAs of 1 million people or more. MSA is metropolitan statistical area. You can think of it as the city and the surrounding suburbs. So we're looking in Jacksonville, Florida, Orlando, Florida, Tampa, Florida, Louisville, Indianapolis, Nashville, Cincinnati, and Columbus, Ohio. That's really it. We're doing that not necessarily that other markets aren't good, but just from a business standpoint, we want to build up scale in those areas to have greater economies of scale. If we want to bring anything in-house and more vertically integrate, it's easier in fewer locations. We also have 2 very good managers in those areas that are more regional. They're not national, so we like working with them. And we focus on B and C assets, and they can be anywhere from your more typical light, medium, value add, stable deal, all the way down to heavily distressed, opportunistic stuff. So we've bought 2 deals that were 100% vacant. We've bought a couple deals that were 50 to 70% occupied. So we have bought some hairy deals as well.
Okay, got it. So, and you do real estate syndications, is that right?
Correct.
So for the people who are watching this and thinking, what is real estate syndication? Can you explain, in a simple terms, what it is?
Yeah. So whether it's any commercial real estate or real estate property, even if it's your own home, you're going to buy a property, you're going to go out and get some sort of mortgage for it, most likely. And you would come up with the down payment, any closing costs. And if you were going to fix it up, all that would come out of your pocket. It would be in the form of equity. What syndication is basically saying, instead of our company being all the equity, we will then syndicate out and raise money from investors to make up a percentage of that equity. So if it was a $10 million property, we got a $7 million loan, we were going to raise $3 million just for easy math. We would probably raise anywhere from $1.5 million to $2.5 million from other investors so that we don't have to come out of pocket for $3 million. It allows our money to be further diversified, like we talked about earlier. And also it allows us to make money on other people's money when we perform. So that's really the business model in a nutshell.
Got it. So what are those people that are investing with you? Like, can you give kind of by the SEC terms, like what type of people can invest in your deals?
Yeah. So depending upon how we structure it, it's either accredited or non-accredited investors. Most of our deals, because it's called 506B, they do allow us to have up to 30 non-accredited investors. We're typically not doing 506Cs, so we do allow several non-accredited, but we never go close to that 30 limit. We're typically in the 5 to 10 range. And for the most part, it's just friends, family, or private investors who've reached out to us who have some money saved up. They're not far away from being non-accredited, but they're just not quite there yet. Somebody who is pretty far away, we typically don't allow them to invest because we do have certain minimums, and we don't want to have, a large percentage of somebody's net worth tied up in a deal. We think that's going to lead to long-term problems because things come up, emergencies happen, you need to liquidate and have your funds. And unfortunately, these are illiquid investments. I cannot just sell your shares in 24, 36 hours like you can with stocks and get you your money back. I can't even promise you that I can get you your money back, let alone within a time frame that would satisfy an emergency. It could take months, and it may not even happen. We've had it come up a handful of times, and so far nobody's sold their shares to somebody else. So I've never even had that happen. So we try to make sure that anybody who is non-accredited is in a situation that can, I don't want to say afford it, but can comfortably handle it, and just feel confident that, hey, if this money's tied up for 5 years, you're going to be okay to live. God forbid something happens.
Yeah, got it. So for the people who are watching and thinking, okay, maybe I'm not accredited, so 506B sounds like a great opportunity that I can be a part of. So what is the process behind that? Like, should a person open an LLC? Should I give you just a check? So what is the process? How do people invest in those deals?
So they do it a multitude of ways. I cannot and I will not recommend for an individual how they should do it. They should talk to their own accountant and attorney. Yep. However, there's people that you can do it with a self-directed IRA, a self-directed 401k. You can do it with cash. You can do it in an LLC. You can do it in a trust. We've actually worked with 1031 investors, so you can do it in a TIC, which is a tenants in common. So we're fairly flexible on how we work with people. Besides that TIC component, if you do it in a trust or whatever, it's still treated the same way. It's just kind of what name shows up on the K1 for tax purposes and who do we send the money to. Then it's how does it get treated on your side. So if you're like, oh, how should I do it? I'll say 50% or more people just do it in their name. So take that for what you will, but you should always get individual advice on your specific situation.
Yeah. And the minimum would be like, what is the minimum that people can invest in those type of deals, just in general?
Yeah, typically 50,000.
50,000 is the minimum. Okay.
Yeah.
So again, so what is the plan in general? Like when you hold these properties, like when it comes to the holding, what is the strategy you're planning to like hold 5 years, refinance, sell?
Mhm.
Like what's going on with the current portfolio when it comes to the strategy?
Yeah, so we have two, I'll say, bucket strategies. Everyone's slightly different. But for the more distressed stuff, because you can't get long-term debt out of the box, you have to get a construction loan. We don't refinance and hold long-term. We just decide to sell, assuming the market makes sense. If the market doesn't, we would refinance and hold until it made sense. But those are typically shorter, so anywhere from a 2 to 5 year hold. And we do it as an opportunity for investors that are looking for a little bit more upside, a little bit of a quicker way to maybe increase their capital, but that also comes with a little bit more risk. Though those are a little bit by necessity, a little bit by choice, 2 to 5 year business plans, depending upon the property, the location, the capital plan, et cetera, are stuff that we're going out and it's 90% occupied. It's stable. It has several years of historical financials that are stable. It's not as risky. Those we're typically saying 5 to 7 years we plan on hold. We'll typically get debt that's anywhere from 7 to 10 years long and give ourselves a couple years cushion just in case something happens. So if we get 7 year debt, we'll probably say expect 5 years, 5 to 7 years. But if something happens, we have a couple years of wiggle room that, we don't have to make a choice of whether to sell or refinance. So that's typically how we tend to look at it.
Got it. Okay. So again, for the people who are watching and thinking kind of, okay, passive investing, maybe it's not my, choice that I would like
Mm-hmm.
to go with, but I would like to explore, same as Chris, maybe, I'm young or old, it doesn't matter, but I want to be part of these, big deals, 4 units up to 100, 200, whatever. So what's would you recommend for those people during current market conditions? Should they go, like, what path should they take? Should they go educate themselves, get a mentor? They should follow and connect with potential partners. Like, what should be an approach for these people?
Yeah. So I think just getting involved in quote unquote bigger deals is not enough to differentiate the path you should take. I think you need to basically reverse engineer what is your end goal. Do
Mm,
you want 80 units that you just own by yourself? Do you want to build a syndication company that owns 500 million, a billion, 200 million in assets? Do you want to manage properties yourself? Do you want to be hands in the weeds doing, renovations? And like, you got to reverse engineer what you're looking to accomplish. And I think that'll tell you how to do it. I think getting somebody with experience is definitely a good thing. I learn by being surrounded by people who know more than me. It makes me better. I learn through kind of osmosis in a way, or seeing other people and learning that way. But the best educator by far is just doing it yourself and figuring it out and having those resources around you to help you out when you have trouble or you don't know. So I don't think it's bad having somebody that can help you out, but that shouldn't stop you from going out and doing something. So whether that's buying a 5 unit yourself or buying a 20 unit yourself, or investing passively to gain a little bit of knowledge, or to joint venture on a property with somebody else. There's a ton of ways to do it, but I wouldn't say if you're going to go that mentorship education route, it should be hand in hand with actively participating in something. It shouldn't be, if I have, money, it shouldn't be give somebody 10, 20, $30,000 of money and that's my last dollar, and then I'll build it back up over the next year to go buy a property. That's totally wrong. One, I
mhm.
think you need more capital than that to get started, maybe. And two, it should go hand in hand.
Yeah, yeah. Well, definitely great advice and great questions for people to answer. As I said, if you kind of look where you want to go and kind of look from that goal back, kind of reinvent. Okay, I want to own these units. I want to have this, and you kind of move towards that goal. So that's definitely great advice. I
Yeah.
wanted to ask you about marketing. I don't know how much guys do you believe in marketing, and what marketing approaches do you guys use to kind of promote your business? I'm a true believer that during these times where attention is a currency, basically,
Mm-hmm.
when you hone attention of people, of accredited, non-accredited investors about the deals that you currently have, you will have a lot of kind of people and kind of, the flow of people coming in towards you. So what do you guys use beside the TikTok, as I seen you have that too. So what do you use for your marketing approaches?
Yeah, so I'm also a big proponent of content marketing. And I think today content is such a wide spectrum of things. It could be a blog, it could be podcasts, it could be social media, it can be newsletters, it can be webinars. I mean, kind of almost anything that you just do or put out there for free, I kind of view as content marketing in a way. And you're basically building up a brand. So for me, I view there's branding and then there's advertising, which is paid stuff. We haven't really gone down that spectrum. We've played around a little bit with like Google AdWords and stuff, but I mean, a small, tiny, like I think $10 a month or $20 a month or something, just to kind of get a feel for what it works like, but not anything we've really tried yet. So we do more of that stuff. So we have our own podcast. We do a lot of stuff on social media. We do a newsletter. We do some webinars. We used to do a meetup every month locally, but we've kind of stopped doing that for the moment. We talked about going virtual, but just decided against it ultimately. Do things through bigger pockets a little bit. Try to be in a lot of different places as much as possible.
Yeah. So what do you guys do on a podcast? Like, is this similar kind of format as we're doing right now? Or are you just talking about like what's going on with the podcast currently?
Yeah. So we started the podcast because we were doing those meetups every month. We did it for 3.5 years, almost every month. We probably did about 30 meetups over, 3.5 years, give or take. And what happened about, 10 or 12 deep was we were speaking at all of them. We turned it into a so we moved it to a hotel, and like for 30 minutes, we would talk about a topic, do some Q&A, and then we do networking at the end. And what happened was we started feeling like we were covering the same topics. We got tired of hearing our own voice, and we started bringing in guest speakers, fairly regularly. And what we would do is go out to dinner beforehand, because these meetups were at 7. We would finish at 4:35. And we're like, hey, let's go get dinner. Let's just chat. Let's, see what's going on. And we would have these awesome conversations at dinner, just chat and shop. And we would always say like, I think this would be so cool. Like, I bet people would love to hear this. They get a ton of value out of it. Like, it's just things that you wouldn't hear otherwise. And we almost thought about just filming those dinners, and they were like, no, like that would take the enjoyment away from us. It wouldn't be quite the same as it would, because when you turn a camera on, it's always slightly different.
Exactly. Yeah. That's what I wanted to say. Yeah.
But we said, eventually we said, why don't we try to just replicate this as close as possible through a podcast? So we just started one. It's called the Real Estate Investing Experience. And we just try to have that same dialogue, chat and shop, a little bit of peek behind the curtain type thing. And I think we do a pretty decent job at it. It's still not the same as dinner. I think part of it too is those dinners, we would already have some sort of familiarity with the people. We already kind of knew them, which we don't know all of our guests, unfortunately, beforehand. So you do lose a little bit of that, but that's the goal in mind, is to try to be as raw, honest, authentic as possible.
Yeah, that's beautiful. Again, definitely recommend for people to go and check it out. What's the name again of your podcast?
Yeah, it's the Real Estate Investing Experience. It's on every platform, YouTube, or you can go to the reiexp.com.
Here you go. Here you go. Awesome. So before we wrap up, I just want to ask you the goals again for this year. I'm sure you had a big goals for yourself personally, for the business, and I'm sure you're going to follow through with these goals for this year. But the upcoming year, because everybody kind of forgot this year and they already looking ahead. I think these times like these, where there's a lot of uncertainty, again, in the same times, there's opportunities hidden if you just keep your eyes open. So the times could be really good for a lot of people if they just start looking for those opportunities. So, but if we talk 2021, what are you planning to accomplish for yourself personally and with the Toro Real Estate Partners also?
Yeah, so Toro, we're still looking to build up scale in those areas. Right before COVID, we were actually looking to hire 1 or 2 people in the office and continue to expand. We put that on hold, obviously, because of uncertainty, and cash is king. So we wanted to make sure we were in a secure position. But we're continuing to look for properties. We're continuing to look to build up our portfolio and just improve every single day in multiple facets. Myself, I'm actually in the process of buying a small deal for myself down in Florida. So hopefully that'll be under contract by the time this goes live. So I'm just looking to have something for myself on the side that's just, my control, no investors, because I think it's another way for me to diversify. I have money invested in Toro deals, so I've had money in real estate, but it's always good to just have something that's totally under your control as well. So I'm excited about that. I'll probably continue to look for more of those slowly over time, just 10, 15, 20, 30 unit properties in areas that I like and have a manager that I trust. So yeah, I don't think anything beyond that. I don't think anything crazy. I think we're still in fairly uncertain times. I think we're going to continue to evaluate as we go and see what happens going forward.
Yeah, do understand. Okay, so it's been a really fun interview. I mean, I definitely enjoyed it. I mean, it's very impressive that still being at the age of 19, where you started your journey with the, flipping houses, and now you're heavily involved into multifamily, syndication, helping other people to build their wealth as well, during these times, which is very important. I see a lot of people, when I talk with the business owners, a lot of people looking towards different asset classes, because again, the bank is not going to pay you anything, right? You have to pay the bank to keep the money. So, and the stock market is too volatile. So people are open to more opportunities, which is real estate has been, for hundreds of years, it's been trusted, vehicle to preserve and grow your wealth. So it's awesome what you're doing, with the Toro Real Estate Partners. And I'm sure you're going to follow through with all the goals that you set for yourself and for the business. So for the people, if they want to get in contact with you, what will be the main platforms, including the TikTok, of course, that they can go and get in contact with you?
Yeah. So I actually just joined this really cool platform. It's a text-based platform called Community. So you see like people who have like numbers that say text me, just got one. So anybody who wants to hit me up really quick, it's really just like texting back and forth, but I actually don't get people's numbers. So you don't even have to worry about me like calling you up randomly in the middle of the night. But you can shoot me a text at 2 a.m. and I'll get back to you the next day. So that's a really cool place to reach out. Literally just text me 631-212-0062, or anywhere on social media, just search Chris Grenzig. So Instagram is at chris.grenzig. I think everything else is just Chris Grenzig.
Yeah. Okay. Awesome. So again, it's been a great time, guys. This is an episode 69 with Chris Grenzig. Make sure, go and check it out. His platforms, they have a great content on all the social media. I checked it, so go and check it out also. Again, the one thing that I want to ask you guys, just share this message with the friends that you think this content could be valuable. Because again, I'm sure you know a friend or a person who maybe in this position when, he's lost or he's looking for something, an advice that can help him to, follow through the uncertain and tough times. So I think that could be the message that person is looking for. So make sure to share that. And yeah, just been a great time and a great opportunity to get to know you, Chris. Hopefully we can do something, in the future as well. And guys, as always, I'm going to see you on the next episode.